All right. I think we are live and ready to go. Now, I am happy to have everyone joining. Good morning, everyone. Thank you for joining us. My name is Jason Leibowitz from Meanwhile, and I'm delighted to welcome you to today's webinar. We're lucky enough to have with us Nathan McCauley, the CEO of Anchorage Digital, and Zac Townsend, the CEO of Meanwhile. Thank you both for being here and taking the time for this conversation. Before we begin, a quick note, today's discussion is for informational purposes only, should not be considered investment or tax advice. There will be ample time for Q&A at the end of the webinar, so please use the Q&A feature to type in your questions at any point, and feel free to upvote the ones you'd most like answered. With that, let's get started. Zac, over to you.
Great. Thanks, Jason. And thanks again, Nathan, for joining us. We're really happy at Meanwhile that Anchorage is our custodian. I'll tell a story, which is when um, we started in early January 2022, and then, FTX and the world fell apart later that year. And Anchorage was actually decided at that time, I think, to not work with as many small customers for strategic reasons. But you all graciously let us stay on and sort of said, we believe that this insurance company is going to have a lot of potential. And we've been really happy with Anchorage ever since. And I just want to sort of start there, actually, a little bit with your journey, which is, we decided to start this company because my co-founder and I sort of wanted life insurance and Bitcoin for ourselves, but also we are really comfortable with like regulatory stuff. So I like built risk systems at Stripe. I built another regulated fintech. So we sort of knew that we loved the idea. I don't know, if love the idea, but we were willing to write 1,000-page business plan to start a full stack regulated life insurance company. And even in those early days, we looked up to Anchorage as a company that had done that hard work too. So I'm sort of curious. You're a security engineer. Like, how did you guys decide to become the first like OCC regulated national trust company?
Yeah, it's been an interesting ride, and thanks Zach for your partnership. It's very nice to be working with Meanwhile, and I'm really excited. I was mentioning earlier, I'm a little bit of a insurance nerd, but also insurance neophyte. Like I don't know the ins and outs of everything, but I find the risk transfer products to be actually very fascinating. Really excited to be here. In terms of Anchorage, there's people are prone to this idea that there's some sort of contrary view that a decentralized assets shouldn't need a centralized custodian, or it shouldn't need a regulated perimeter. Isn't this what we're supposed to be trying to replace? I understand the theory to go after that like thought line, but on the contrary, I would say that even the early posters in the Bitcoin Talk forums were talking about the fact that Bitcoin should eventually end up inside the traditional financial system. The one of the most famous posts was this one from Hal Finney, where he said that most of the Bitcoin is going to get held in banks, and that just for usage and for risk reduction, that would make sense. And so when building Anchorage, I kind of had that ethos in mind that like centralized services do not minimize the value of decentralized capability. On the flip side, it actually in many ways helps the Bitcoin story. The fact that there are people out there like ourselves building regulated financial infrastructure helps get crypto into the zeitgeist, into the ecosystem, and I think in many ways solidify its position in the world. And so when I'm worried about having to read through 1,000-page business plans like you've talked about, or endless compliance docs or things like that, as a security engineer, I comfort myself knowing that like this is all part of the plan. This is part of how Bitcoin becomes mainstream, and there's a tremendous amount of work that needs to go into that. Obviously, you have to build, at least in our case, the entire security tech stack, and then on top of that, the regulatory infrastructure. Uh, kind of in parallel, and then bring together the crypto stack and the regulatory stack, because they can't be kind of divorced. They have to be integrated. So that's been a tremendous area of investment on our side. We've spent tens of millions of dollars building out all those compliance systems, and now really done the work, I think, to educate the federal regulators about what it looks like, at least in our context, to run a federally regulated custodian for digital assets. And that's just been it's been a joy, and I'm really happy to see that so many wonderful things can get built on top of it, like your service at Meanwhile.
Yeah, amazing. I mean, it's very similar for us in that, we're regulated and licensed in Bermuda, and Bermuda sometimes for people who aren't in the insurance industry can sound like this just another offshore jurisdiction, but it's really the insurance capital of the world. You walk around Hamilton, Bermuda, and it's like Munich Re and Chubb and Swiss Re and like RGA and all these big offices. There really isn't a tourist economy because it's not hot enough there. And yeah, we had to, we have a full compliance program. We have to do all this actuarial math. We have audited financials. And I'll actually take it a step further, which is to say, I wouldn't want to do like all 3,000 hours of my working hours in a year on compliance. There's someone else in the team who does that. But I actually somewhat enjoy my 100 hours. It is a very like interesting, yeah, particularly like if you have an engineering mindset. There's like there are these rules, but some of them are fungible and some of them aren't. And there is a real rationale for all this stuff. But I think that one of the reasons we choose to work with Anchorage is because you guys have done that hard work. And I think that's also why our you have many of your customers work with you, and it's also why like many of our customers, I think, work with us. And it's sort of a contrast. I think I Anchorage is interesting as well. Like we feel like it took us a little longer to get started in the beginning to go through that process, to go to a jurisdiction that people respected, to do the hard work of building everything. But now we feel, or we felt then, but we feel now like it was certainly worth it. This was the type of it's the type of thing that our customers really notice and in a world where uh, trust is like hard to come by. I think taking those steps to seem more trustworthy and to be more trustworthy is really important.
Yeah, it's totally true. I mean, I think the nice thing about our industry is that people actually start with this notion that you shouldn't trust banks, you shouldn't trust regulated entities, and then you add on to the fact that, like, over the past several years, we have seen some pretty tough times happen within crypto because of people not running centralized services well. So it's kind of like you start at zero and go down. And so when you're trying to build a trusted institution, it's that much more and more important to have everything by the book, regulated, and really kind of build on that trust you can build over time.
Yeah. Um, and I'm curious about what I guess as a founder and who's building regulated in this space, like do you end up like do you what sort of advice do you have for folks like me?
I mean, I'd say that the biggest one for me has just been the kind of slow burn. Uh, these things take time, but particularly financial services companies um, grow with compound interest. And like when you're starting from zero, the compound interest curve looks quite flat. But over time, it really it tends to accelerate. And so yeah, I think that's the biggest thing is, like, stay the course on these kinds of things, because I think it's maybe one of the most important things to keep in mind is that there are way more people not in crypto than are in crypto right now. And so just the secular growth that is still available within Bitcoin is still extremely profound. And so that's the thing to kind of keep the eyes on, is that we're still in the early adopter phase
Oh
for
yeah.
this asset class, and the true growth will happen later on. One of the ones that I always keep in mind is Standard Oil, this incredible oil empire. Most of that was built before the invention of the car, and then kind of
Okay.
all of the compounding that actually accrued to Standard Oil happened after the car came out. But the infrastructure was laid far before
Yeah,
that.
yeah.
Yeah,
John D. Rockefeller was a merchant of light. That was actually what he sold.
exactly right.
Is
Yes.
I think everyone's in darkness in 1850.
Yeah.
Um, yeah, that. I would literally a life insurance company compounds over time, but also like we're
Yeah.
seeing that.
Yeah.
And this is an analogy I sometimes use with my investors, which we've been fortunate to be supported by some amazing people. Um, is one of the like three insurance companies in the world right now with market caps over $100 billion is this company called Ping An, which many people haven't heard of, but is actually like one of the few companies on this list of life insurers that was founded in the last 50 or 100 years because it started in China in the 90s and then it rode that
Interesting.
wave of growth. And I sort of use that as the analogy that like we see that Bitcoin will be an economy, not just like gold in the ground. But that's our analogy. Is like this is an economy, it's an economic system. And then there are certain regulated financial institutions that exist in every well-functioning economy. There are custodians and there are asset managers and there are banks and there are payment systems and there are life insurers. And we're going to ride the wave of this economy growing from relatively small to something like much, much bigger. And you don't have to believe that the Bitcoin economy is going to be the biggest economy in the world. You just have to think it's going to grow a lot. And um, I don't know what percentage of like global GDP custody is. I mean, BNY Mellon is pretty big, but life insurance is something like 3%. Life insurance premiums are something like 3% of global GDP. So we want to ride that wave of this economy, and it's a weird economy in that it's global and it's decentralized, and it's outside the control of any government. But that weirdness is also what makes it special, and it's going to make it grow.
Yeah, so let's talk about some of the weirdness and some of what's special here. How does the product meanwhile actually work?
Yeah,
What does Bitcoin life insurance really mean? Is this that Bitcoin is held as are the premiums paid in Bitcoin? Are the policies paid out in Bitcoin? What do you do about like kind of reserves and capital management? I know there's a lot of interesting stuff happens there. Can you just kind of walk me through how this actually
yeah.
works? And again, I'm a little bit of an insurance neophyte slash nerd, so would love to hear some of the details about it.
Cool. Well, let me split that up into two parts. One is like, what are we as a company and how does it work? And then like, how does it work for our customers? So for us as a company, Um, yeah, so we have a life insurance company in Bermuda. It is a fully functioning, operational, regulated, licensed life insurance company. It has all the obligations of a life insurance company. And that company, Bitcoin is its currency. It operates entirely in Bitcoin. In fact, we don't even have a bank account. We just have an account at Anchorage. Um, and what that means is everything is in Bitcoin. So people pay us premiums in Bitcoin. We pay out all claims in Bitcoin. And then we do all the insurance stuff you mentioned in between. So our like actuarial math is in Bitcoin, our regulatory filings are in Bitcoin, our solvency calculations are in Bitcoin, our audited financials. For us, I think we're the first company in the world who has audited financials and there's a B in the corner and not like a dollar sign or a euro sign or a yen sign. So for us, truly one Bitcoin is one Bitcoin. And that way, it's quite safe because if the price or the exchange rate with Bitcoin is at 100, it's at 120, it's at 30, it's at 15. All these numbers have been touched while we've been running this company. It doesn't matter because the promises we're making to our policyholders and the assets we have on our balance sheet are like perfectly matched in Bitcoin. So that's how the company operates. Like one Bitcoin is one Bitcoin. And then we're really happy that, as I said, like Anchorage is our custodian. What we do is for every individual user, when they create a policy, When they become a policyholder, we create them an individual wallet. That's how we link their premium payments to their particular policy. They have an individual payment address to like pay their premiums into. And then we like sweep those things into our general ledger. And so that's what it is, like how the company operates. And then we have to meet all the solvency rules and like segregation of funds, and you know all this stuff, Nathan. That like comes with like being uh, a regulated
Totally.
financial
Yeah.
institution. And then what that means for our customers is I often just ask this like relatively simple question. If you're thinking about life insurance, um, would you want your kids or your wife or your niece or whatever, would you want them to get $1 million or 10 Bitcoin when you died? And by the way, there are a lot of people in the world for whom the answer is $1 million, and like those aren't our customers, right? Our customers are the people who are like, oh, I'm not going to die for 10, 20, 30, 40, 50 years.
Mhm.
And 10 Bitcoin is going to be worth, in purchasing power terms, like so much more than $1 million. So the policy is whole life, uh, which is well named because it lasts your whole life. So, since you will eventually die, there will eventually be a payout. And then a typical policy, we go as low as a quarter of a Bitcoin and as high as like 30 Bitcoins, but it's something like you pay us. I'll just use round numbers. These are going to be big for some people, small for others. Those people are fortunate. Um, 1 Bitcoin a year for 10 years. So you've paid us 10 Bitcoin. And then we promise whenever you die, your beneficiaries will get 15 Bitcoin. And then there's this stuff in the US tax code that we just follow all these rules, which we can get into the nitty gritty if you want. But what that means is like it goes to your kids income tax free, it's compounding, that 10 to 15 is tax free. And then the big thing that people like get really jazzed about is that you can take a loan, a policy loan out of the policy, and that policy loan is tax free too. So if in 10 years the price of one Bitcoin's $1 million, you could borrow a Bitcoin out of the policy and it'd be like a new Bitcoin for you. So you wouldn't owe capital gains tax between, I don't know, now and that $1 million. That's how we have some policyholders who don't even yet have a wife or have kids or whatever. But these are all the same benefits that Northwestern Mutual or New York Life would be pitching you on a dollar policy. We just do everything end to end in Bitcoin.
Okay. So bunch of different interesting dimensions there. I guess um first off, I think one of the things I think is really interesting about this is that there's so many Bitcoiners who their explicit goal in life is to hodl their Bitcoin forever and pass it
Oh
on to
yeah,
their
there's like perfect alignment
yeah,
between life
it's perfect.
insurance and hodling and
Yes.
like retiring your bloodline.
Yes.
Yeah. Uh I think we didn't appreciate when we started the company just how much resonance there would be between hodling and life insurance. I like to say life insurance is the original hodl.
Yeah, it is. And in a sense, there's almost a sense in which you guys could let people advertise that they are hodling via this mechanism. Like
Oh, I
there's
haven't thought of that. That's a cool idea.
yeah, people really like to show their commitment. Some people are like, hey, I'm time locked, these kinds of things. But like, hey, mine is locked in this policy, and I will hodl till I die. It's an interesting dynamic. And so do people get to opt in to how much they pay in premiums, since it's all like
Oh yeah,
Bitcoin
yeah, yeah. You
denominated?
get
Like
you get to
how does that
yeah,
work?
people we have some limits, which actually I think sometimes people appreciate, because we don't want to take you mentioned risk sharing. There's only so much risk we're willing to take on a single life or even a married couple. Um, in case you like get in a car accident or something. So the smallest policies we do right now are a quarter of a Bitcoin. So you pay 2.5 basis points of a Bitcoin per year for 10 years. And the largest policies we do are in the like 30 Bitcoin range, which means you pay 3 Bitcoin a year for 10 years. And you decide that at the beginning. But I will say that in some ways you're sort of like going short Bitcoin because you owe us Bitcoin. So we like to say you should never buy a policy bigger than your stack. It's not really, and we do have some people who are like using it as a mechanism of dollar cost average, but that's not my
I see.
recommendation.
Yeah, yeah, because there's that liability that you may not be able to meet. What about one of the things that ends up being interesting for life insurance policies is exactly this notion you talked about being able to borrow from it, either borrowing from it for kind of discretionary purposes, or as I understand it, many people, for better or worse, end up needing some additional capital for kind of end of life type things, some of which might even kick off before they pass. And
Yeah,
so,
yeah.
tell me a little bit about the use cases for borrowing and exactly how they get structured, when and if you pay this back. Like, how does that all function?
Yeah, yeah. Well, I saw some questions in the Q&A, so I'll answer this question a little more broadly. So we comply with all these rules in the Internal Revenue Code. It's section 7702, which is sort of about like what is and isn't life insurance. And it's interesting, the people who drafted those rules in the 80s, this is like part of the Reagan tax revolution, they didn't actually use the word dollars or the word cash. They used the word value. So we're able, in theory, you could denominate a life insurance policy in like bushels of wheat. So we do it in Bitcoin, and then we have a tax opinion for ourselves from a really big national U.S. law firm that's like, these are we believe more likely than not that these are in fact policies. You are in fact an insurance company, that your users um, can count them as insurance policies, and that you can uh, take these policy loans tax free because the policies are, this is really technical, a non-MEC, a non-modified endowment contract, which just basically means that the borrowing is tax free. So how the borrowing works is you're paying your premiums, and there's what's called we call it a surrender value. There's like a savings account inside the policy, and over time that's growing. um, Between when you buy the policy and like age 100, it's sort of like growing from zero up to the face amount. And what you can do is you can borrow up to 90% of the value of that's like in the policy. And those are all in Bitcoin terms, right? So let's say you've put 10 Bitcoin in, you're in year 15, you want to borrow 2 Bitcoin out. There's no margin calling, there's no possibility of being blown out. You've like gotten those 2 Bitcoin, and what we expect is actually that you won't pay it back. Will happen eventually is you'll die, and then instead of your kids getting 15, like I mentioned, they get 13 or 12.8, right? Because we do charge interest on the policy loans. So you're essentially borrowing against the amount we owe you in the end. And but this is a great way if you think that there is ever a chance that you might need some liquidity. You mentioned, Nathan, like wanting like end of life stuff. We actually have a user whose intention eventually will launch an annuity, but whose intention is to like use this like an annuity. So you put in a bunch of Bitcoin, and then he's like, okay, my plan is that every month I'm going to take a little policy loan out to like pay my rent. Like
Totally,
that's his
totally.
explicit plan.
Yeah.
And that way you're less exposed to fiat and more exposed to the Bitcoin.
Interesting. So that makes it in that function, it's more uh, functions for them almost as a retirement theory. That's really interesting, and certainly know I was over time pitched whole life policies with under that exact under that exact premise. So okay, great. And then um, who are you seeing this be popular with so far? I can imagine it starts out with hodlers and the kind of early stage crypto folks. Where else are you seeing people start to get some traction across um, the kind of addressable market here?
Yeah, I assume actually we're somewhat like Anchorage in that our first users and a lot of our users remain like hodlers or early Bitcoiners. But it's definitely expanded into like family offices and people who are like know about whole life or tax optimizations. So in the first bucket, what I'd say is it's probably there's a lot of it's probably some of the people here on the webinar. It's just like friends of ours. One of the things that's super interesting is who are the people who are buying a bunch of Bitcoin or mining a bunch of Bitcoin in like 2012, 13, 14, or 11 or 10, right? It's like some combination of lovable neckbeards and folks who want to buy drugs on Silk Road. I mean, like it was an interesting group of people, but primarily like men in their 20s. Well, now it's fast forward, it's 10 years later. Those people are like growing up. They're like getting married, they're having kids, they're settling
Yeah,
down.
yeah,
And so there's this correlation between a lot of those hodlers and where they are in their life stage. They're maturing, the space is maturing, and like we're like mature company that gets to meet them sort of where they're at. So that's like one set of customers. And they have another set of customers which I would just say is like people who are like otherwise like they have a family office, they're an entrepreneur. Like we have folks who we have a bunch of like like high-end doctors, like there's all sorts of people. And they have decided to own 10 Bitcoin or one Bitcoin or whatever it is. They've made that decision for like inflation risk reasons or currency risk or political risk, like whatever like it tends to be a little less ideological and a little more like schmuck insurancy. But either way, they've decided. And then the pitch to those folks is like this is the right structure for that 10 Bitcoin. Like you get all these tax benefits. We do let people prepay the policy if they want. So like you get to trust that we're custodying it at Anchorage, so it's super safe. Um, and one of the big things that I didn't mention, in addition to like, there's protection if you get hit by a bus, it's gross tax free, you can borrow against tax free, is also like a lot of people have a worry just about literally getting their Bitcoin to their kids, like the mechanics of that. And we are under like a legal obligation to like figure out who your beneficiaries are, to help them get a wallet or to transfer it to whatever. Like that like purely mechanical end of life planning is just like an implicit part of our policy.
yeah. That's one of the simplest transfer mechanisms. I know when my mom passed, lots of things were complicated. I was actually kind of the executor of her estate, but the insurance pass down was actually very clear and
Yeah.
very straightforward. So it totally makes sense that that would be useful for folks. On the other side, what are people thinking in terms of um, is this their main policy, or are they also maintaining dollar denominated policies as well? Kind of like, what's the mix here? Are people all in, or are they doing a little bit of each?
What I like to say, I would say there's two categories are different, right? So if you're like a hodler and you are personally all in on Bitcoin, then we might be your only insurance policy. And then if you're not all in on Bitcoin and it's like a part of your portfolio, you might have like you might have a big term life policy or private placement life. There's all these like ways that you can use life insurance. I'll speak for myself though, right? Um, I have a house and I have a 30-year mortgage on that house. So in dollars, right? So, it's still in dollars. So I have a 30-year term life policy. And that way, if I get hit by a bus, my wife can pay off the mortgage, right? So I sort of matched that liability
Nice.
with a term life policy. But then I was the first user of Meanwhile. So I took all our Bitcoin and put it in the life insurance policy. You just want to like say that you're,
Get in the game, right?
both.
Founders
Yeah, you
got to
gotta
have.
gotta get in the game. So I was
Yeah,
first, my co-founder was second. Um, now we're happy to have, so many more people than that.
yeah,
But so I think they are like slightly different things. Like, look, I like to point out that my son was born in 2018. I bought that like $2 million of coverage I mentioned in term life coverage. The purchasing power of that $2 million has gone down like 25, 30, 35% since 2018 because of inflation. Whereas if I bought a Bitcoin denominated whole life insurance policy for meanwhile it didn't exist in 2018, but if we had, right, I've
yeah,
seen the purchasing power of that go up. I don't even know the number, 20 times or something, right?
yeah, yeah, yeah.
So you project that out 40, 50, 60 years. Um, I Not every one of our policyholders believes this, that like Bitcoin will be like so dominant. But I think from our perspective, at worst, it's a hedge against the dollar policies, and at best, it's going to be like the greatest store of value in existence. Um, and one of the key things to mention, though, because I saw a question around this too, is like everything's denominated in Bitcoin. Like so if you get unlucky and die in 2 years in the wrong point in a cycle and Bitcoin's worth, 50K, then and then you're getting your 10 Bitcoin, whether it's 50K or $5 million, right? That's the point. It's a policy. It could be denominated in euros or yen or Swiss francs. It's denominated in Bitcoin.
Yeah, yeah. It's this notion of skin in the game for founders is so important. For avoidance of doubt, all of my crypto is inside of Anchorage. So kudos to you for putting all your
Yeah,
Bitcoin
yeah.
inside of your inside of your policy. Yeah. Looks like we
So
got
yeah,
some.
yeah. There was no question for us that both we genuinely believe in the product. We genuinely believe in the legal and tax structure and the regulatory setup and all of that. But uh, so we were quite happy to be our first users. Again, now we have many hundreds of Bitcoin from users. So there's been a lot of growth since then.
Yeah, yeah, it's awesome. We got some questions from the crowd here. Looks like we got some good engagement there. Jason, do you want to pick out some to maybe throw our way?
Yeah, great. This is a great talk and really informative. So let's start with the most upvoted questions. For customers with existing Bitcoin, can the Bitcoin be transferred into the life insurance policy tax-free, or would the customer have to pay personal tax on any gains as part of the Bitcoin premium payment? This was for Zach.
Yeah. Um, I'm gonna go back to what Jason said, which is like we're not uh we're not your tax advisors. What I'll say is different policyholders have gotten different advice on this specific question around whether the putting Bitcoin paying the premiums are taxable. And so I think the real answer is like no one knows, and it's a question of like how conservative or aggressive you want to be in your tax positioning. Um, the uh, yeah, I guess that's the way I'd say. The math, depending on what you think is going to happen to Bitcoin over the next 10, 20, 30, 40, 50 years, the policy still makes sense to buy, even if you have to like take the tax hit now, because the amount of gains that you're not paying taxes on in the future may be a lot more than the amount of tax you're paying now. But that's like a personal decision that is both like what tax advice you get around the payments of premium, and then like what what your personal situation is. We have had some users who have opted to actually think that it's taxable when the price of Bitcoin is below where they bought Bitcoin, which may or may not apply to different people.
Great. Next question, and this sort of follows on from that, Zach. Aren't there rules around how much an insurance policy's cash value can grow before being classified as an endowment? and triggering personal capital gains? For example, if Bitcoin price grows relative to dollars, how do you guarantee it's still considered insurance for US customers and therefore tax-free?
Yeah, again, Um, on this particular point, like we feel actually much more confident than the answer we have to the question of whether it is or is not taxable to pay the premiums. As I said, the tax and insurance practice of a very, very large law firm has given us a tax opinion that very specifically outlines that like they believe we are complying with section 7702, which again is like what is and isn't um, a life insurance policy, that you can denominate these policies in Bitcoin, that it is a non-modified endowment contract because that's why it's a 10 pay, and you like even if you pay us up front, you sort of like pay into a separate account and then we pay the premiums. So these are pretty like technical insurancy things. And I guess what I'll say is if you sign up on our website, you that is not a obligation to buy life insurance. It's a obligation to get an email from Jason or Danny or me. These are people on the team to have like one-on-one conversations, and we're happy to sort of outline all of this. But fundamentally, we're quite confident that um, the that our policies are life insurance and we are following these rules.
Great.
There's also a
Anchor,
bunch of like international questions about someone asked about Canada, someone asked about Germany, someone I think asked like I'm not going to answer each of these. Like you should come talk to us. We are slowly but steadily designing versions of the product to work in different jurisdictions. And there's different tax rules and insurance rules in every place. And although the policy I've outlined today, which is the 10 pay, which again you can optionally pay up front, that we've optimized that policy, like I've sort of been saying, around the US tax regime. But if you're a German or an Australian or something, you might want a single premium policy, a an insurance bond might make sense. There's other products we'll launch in other places.
great. We have time for a few more. Anchorage has set the standard for regulated institutional custody in digital assets. How does Meanwhile leverage that partnership to give policyholders confidence that Bitcoin life insurance is as safe or safer than TradFi?
Look, I can give some space here for Nathan, but like one of the things when we started the business is we went and we looked at every custodian, and first and foremost, even before we got to the regulatory setup, we asked ourselves questions about security. And I think Nathan, why don't you give a little bit about the air gap and the hardware key, like just a little bit about how amazing you guys are. But like we chose Anchorage because first and foremost, like our obligation is to keep the Bitcoin safe.
Yeah, absolutely. So, we distinguish ourselves both on the security front and on the regulatory and compliance front. The regulatory one ends up being a nicer, kind of easier to digest message because just like we got a national trust charter, we got a national trust bank, we're the only ones that have that. We're cool. But I actually think probably the most cool thing about us is the security tech that we've built. So my co-founder and I were building security systems for our entire career. Early employees at Square, where we designed the credit card reader there, got on the patent with Jack Dorsey, and then basically just have built security infrastructure for our entire careers. 2017 rolled around, crypto got really big, and we decided, hey, let's build the most secure way to be able to hold assets. And that the biggest answer there is there's not one single thing. The way to get that right is to get everything right. And so we have hardware devices that hold the actual signing keys. Those hardware devices are held offline, only connected through an air gap. Even the messages that we send through the air gap have to be signed and biometrically authenticated by the underlying clients. So in this case, the employees at Meanwhile. So we know exactly what the institutional intent was. And the way we get to institutional intent is there's a quorum of people that have to come together to sign off on a transaction, whether it's a movement of assets or any other thing like that. They are tracked in terms of biometrics. They are tracked in terms of behavioral activity, geography. And by geography, I mean not just where they are on the map, but what floor they are on the building. We take all this into consideration to decide whether a transaction can go through. And that's tremendous amount of data allows us to be very precise and very on point with the way that we um, run the security of our system, while also making it easy to use, flexible. And then you take all of that incredible technology that we built there, and then layer on the oversight from a federal regulator, and the kind of due diligence that we need to do on all of our partners, all of our third party providers that come in. It's really a beautiful thing to behold, the entire security of the system, and we really focus there to allow incredible products like Meanwhile to get built on top of that infrastructure.
Thanks, Nathan. This is where I like to point out that I can't move Bitcoin on my own, so don't chop any fingers off.
Yes,
It's not gonna
same
not
here.
gonna work. Yeah, yeah.
Yeah.
Uh, one other, I think a lot of people have asked this question in different ways, but one of the big questions we get is like, how are you turning 10 Bitcoin into 15 Bitcoin? And fundamentally, I'll answer a long term and a short term. Long term, I want to go back to what I said, which is we believe in a Bitcoin economy. We believe that Bitcoin is going to be money in the world, not just like gold in the ground. And if that is true, then there are going to be capital markets denominated in Bitcoin. There are going to be debt capital markets denominated in Bitcoin. And ultimately, we believe there's going to be a yield curve in Bitcoin that's like, how much does it cost to borrow Bitcoin for a year, for 5 years, maybe even 10 years? Um, and then what we do primarily today is actually a different set of products we're just sort of not talking about, which are like, um, uh, basically what we have that other people don't is we have duration, and then we trade duration for credit protection. And the number one product that we do on the investment side is actually a Bitcoin for Bitcoin, fully collateralized tax arb. So people like send us 100 Bitcoin and we send them back 97, and then we're charging them 3% interest. And there's a whole like tax and legal structuring around that. But fundamentally, what you could think the business we're in is we trade direct duration for credit protection. We've done some loans to like big institutional counterparties that you know the name of, that have like public credit ratings often, or things like that. And then we do like normal credit stuff, like have a 100-page credit agreement, look at their financial statements, have covenants, have seniority, have parental guarantees. Like, no, we won't be against your bullshit Cayman subsidiary with negative equity. And we have never had a credit loss in the history of Meanwhile, and that includes when FTX blew up, and Celsius and Genesis and BlockFi. Um, but fundamentally, the distinction is like the rate of returns are quite low on the policy. Right? You're putting in 10, we're promising you 15. That susses out to something like 2% returns per annum for like normal people. And we're able to achieve those like sustainably without any trouble and without very much credit risk.
Final question, Zach. Can you talk about just the volatility of Bitcoin? There's a lot of questions around what happens if Bitcoin drops in price, the time of inception, or da 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 da. Obviously, we've touched on it, but I think it's just worth repeating.
Yeah, no, it's the policies in Bitcoin. So as I said, if you put in 10 Bitcoin a day, and that's like a $1.2 million, and you die and Bitcoin is worth zero because it's completely fallen apart, then you have gotten 10 worthless, or we paid you out 15 worthless Bitcoin. On the other hand, if the price of Bitcoin goes to $1 million a Bitcoin, then your kids have gotten this income tax free $15 million in value, right? So look, fundamentally, the product is designed, it's built for folks who believe that the price of Bitcoin, the value of Bitcoin will be more in the future than is there. And I like to say frequently, Nathan and I might be aligned on this, I don't know. I don't know what the price of Bitcoin is going to be next week or next month or even next year. If I did, I guess I'd be running a hedge fund. What I feel confident in is that Bitcoin is going to be a valuable asset, a very valuable asset in the world in 10 years, 20 years, 30 years from now. And like we're building a business on that premise. And the day-to-day, week-to-week movements of Bitcoin sort of don't matter to us. I try not even to know what the price is.
Never sell.
Never
That's
sell.
the the most important thing here. Yeah, totally agree. This is a long-term asset. There's going to be volatility, but I think that's one of the for certain sets of people that can help. I think the reason that mortgages are interesting is that you hold the house for a very long time while it appreciates in value. And so, depending on your orientation, maybe it's actually safer for you to get your Bitcoin into a policy like this, where you are kind of locked into holding for a long time. Because I agree. I also am not running a hedge fund. I'm running a business that 100% built on the fact that these will be more valuable over time, and the meanwhile product seems like a great way to kind of lock that in and give to your what you say earlier, retire your bloodline.
Yeah. Not my line, right? Yeah.
Yeah.
Well, there's a lot of questions we didn't get to, but I want to. You know what? You can email me at Zac@meanwhile.pm or Jason@meanwhile.pm. And we're happy to answer more questions about the policy. Jump on a Zoom call one-on-one and talk about it. I just want to thank Nathan again for his time and for everyone who's attending. One of the things that we just feel strongly about is that you know, Anchorage is a great partner, or an incredibly safe custodian. That's why we chose them. And at the same time, we just feel kinship with all the builders in Bitcoin land, crypto land, who I think are doing the hard work, are going through the long slog, building regulated, compliant financial institutions. And we're happy to be together with Anchorage on that list. So thank you, everyone.
Great. A recording and the materials link will be sent to all registrants afterwards. We appreciate both your time, Zac and Nathan, today. And have a great day, everyone. Goodbye.
Thanks for having me. Have a good one.